Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to Wealth Matters podcast. Hope you guys are doing great today. I want to talk about cryptos today. So, what happened? And I'm recording this on Tuesday, January 23rd. Just a week ago, crypto hit over 48 grand because of the ETF, right? And what happened yesterday? Yesterday was a bloodbath. Crypto's total market cap dropped 4.5% in a day. BTC was down 5%. ETH or Ethereum was down 7%. And many altcoins went down by 10% or more. So what happened? I think the first thing I started looking at it, and the biggest takeaway was that FTX, the crypto exchange which went down. The owner of that or the founder of that crypto exchange pretty much made a lot of money and screwed every investor and everyone who was involved with FTX. They had over a $1 billion worth of GBTC, the grayscale's version of Bitcoin. So FTX's bankruptcy estate dumped 22 million shares of GBTC. That added over $1 billion in selling pressure over the last week. And can you believe FTX collapsed back in November 2022, but 14 months later, the market is still paying the price, right? So this is crazy. The good news now, FTX doesn't have any GBTC left. So, but that caused a pretty big downturn for most all the crypto market. And because they are selling, others are selling as well. So I don't know if you guys remember, but before the ETF came out, GBTC's discount to net average value at one point reached as low as negative 48%. What that meant that basically, if you had to convert to Bitcoin, you will be losing money. Now, because the ETF came out, the NAV is sitting at par. So previously, underwater investors and funds arbitraging the discount have begun offloading their GBTC holdings, right? So 1 billion plus sold by FTX plus, other investors and funds are also selling. So because of that, GBTC's Bitcoin holdings have declined by just over 50,000 Bitcoin. So the equivalent to $2 billion at a $40,000 Bitcoin price. That's amazing. Over $1 billion worth of GBTC sold by FTX plus, almost another billion sold by other investors. So this is killing the crypto markets right now. And also that's touching everything else in the crypto world. So we'll see what happens now, but I'm hoping that the slide stops soon. The second reason is leverage positions are getting liquidated when the market gets hot, right? Like the last few months, investors get greedy, and when investors get greedy, they open up leverage positions. Leverage can 100x your gains when prices go up, but also leverage can 100x your loss when prices go down. So price dropped and over 300 million in leverage position was liquidated over the last 24 hours. I would not recommend getting into leverage, and not especially in crypto world. Real estate world, leverage is very important and very much needed, because that's how you can buy $1 million property and only put 200 grand down or 300 grand down and acquire the property, and the rent will cover the mortgage, right? Also, this US stocks are getting a lot of attention right now. Just yesterday, the Dow Jones, the industrial average closed above 38,000 for the first time ever. So all-time high, and S&P 500 hit a new all-time high as well. So what that means, a lot of money is pouring into stocks from crypto. You saw that money moved from stocks into crypto in December of 2023, and I think the tide is turning now. On top of that, it's earnings season. So some of the biggest companies in the world are releasing their quarterly numbers this week. So let's see. Just be careful right now trading, and maybe right now is the best time to do nothing. Just wait and watch and see what happens. So looking at the top 10 cryptocurrencies right now on coinmarketcap.com, Bitcoin is at 39 grand. That's the number one currency, of course. And the number two is Ethereum. It's 2191. So just think, just a week ago, Bitcoin was 48 grand and it's now at 39 grand, and Ethereum was over 2,700 bucks. It's at 20, oh, a little less than 2,200. The third currency is Tether, so that is USDT. It's supposed to be pegged to US dollar 1 to 1. Then fourth is BNB, Binance token. It's at a little less than 300 bucks. Fifth is Solana. Solana has made a comeback and it's at 81 bucks. Number fifth, XRP, Ripple. It's at number six, 51 cents. USDC, again, the Circle's version of pegging USD one-on-one, that is at 7. Cardano, which is ADA, number 8 for 46 cents. Dogecoin, it's about 7 cents, 7 to 8 cents. Number 9, an Avalanche, AVAX, it's at number 10, around 29 bucks. So if you guys just want to, try to educate yourself, then go to coinmarketcap.com and basically look at this top 10 tokens, right? And continue to educate while you are waiting to buy. Just continue to research cryptos. So Bitcoin would be in a bear market going by all old world definitions right now, right? Luckily, they don't apply well to crypto, right? Because anytime you hear a financial guru say that, oh, if S&P 500 sinks 20% or more from recent high within a month, then a bear market has started. Bitcoin is practically the exact opposite of something like the S&P 500, but it has done exactly that since spot Bitcoin ETFs went live earlier this month. The price of Bitcoin briefly hit 49 grand moments after BlackRock, Fidelity, and 8 others launched their funds on Jan 11. 12 days later, Bitcoin changed hands for 38,500, a 21% drop. Anyone holding spot Bitcoin ETFs since they went live are well in the red. The timing of Bitcoin's recent correction is unfortunate, right? As we know, but just looking at the price movement, just analyzing daily Bitcoin price movement shows similar retracements occurred in March, June, and August 2023. But Bitcoin's price has still doubled its lowest point from last year. There have been 6 bull cycles in Bitcoin's history, not counting the 500-fold explosion in the highly event pool 2 years following in 2009, which also included the Silk Road, Mount Gox, etc., etc. But the first proper bull cycle between 2011 and 2013 included 19 corrections of 20% or more. And they were also very close to each other. The next cycle in 2013 was the shortest, right? But again, there were a lot of 20% corrections. And the cycle which we have seen, most of us have seen, was between 2018 and 2019, where there were comparable shocks every 73 days, around the same frequency also in the 2020-2021 bull run, right? But Bitcoin more than tripled in about 200 days from $4,100 to $12,800 to start this decade. So this time around, Bitcoin is giving up 1/5 of its value every 102 days on average, 40% more than during the previous 2 bull markets. But this is how Bitcoin is, right? Highly volatile. Then you just got to see that 20% or so correction does not mean that cryptos or Bitcoin are done, or again, the bear market is starting. I'm just waiting that there is a Bitcoin halving coming. in April, and what that will start, that is a catalyst for another bull market. So keeping my fingers crossed. Let me know what you guys think. Thank you so much for watching and listening.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!